Welcome to The Explainer. We're going to dive right into a really important topic for anyone who gets retirement income from Germany, because a simple mistake could be costing you a ton of money. And that's a serious question, because you'd be surprised how many people are. And it's happening for a simple reason. There are two types of German retirement payments that look and feel like the exact same thing, but to the IRS, they're polar opposites.
So that leads us right to our first clue in this whole investigation. It's a major misunderstanding that we'll call the false cognate trap.
So what does that actually mean for us? Well, you've got two different government checks coming from Germany, but they trigger completely different tax situations here in the US. And mixing them up isn't just a little oops, it can be a huge financial headache.
Okay, so to really get to the bottom of this, we need to pull out our key piece of evidence, the US-Germany Income Treaty.
You know, the whole point of these things is to make life easier, right? To create some clarity and stop you from being taxed twice. But there's this powerful little clause that throws a real wrench in the works for US citizens.
This thing is kind of the villain of our story today. It's a uniquely American clause that basically lets the US say, you know what, for our own citizens, we're just going to pretend large parts of this treaty don't even exist. This creates a very real risk of double taxation.
But like any good story, there's a plot twist. And that twist comes in the form of what we'll call hero clauses. These are very specific, very powerful exceptions where the US basically says, okay, for this one thing, we'll give up our right to tax. And if you can find one that applies to you, you're golden.
Okay, so here's the million-dollar question. Which type of German pension actually gets one of these hero clauses? Let's get our two suspects and put them in a lineup.
Okay, take a look at this. This chart really breaks it all down. At first glance, yeah, they're both German pensions. But when you dig in, no way. They're paid by totally different offices, covered by completely separate parts of the tax treaty, and they even end up on different lines of your US tax return. They are not the same thing, not even close.
All right, time for the interrogation. Let's put each of these pensions in the hot seat and see exactly how they're supposed to confess their identity to the IRS.
First up is the German Social Security, what they call Rente. Now, this is our hero. This is the one that gets that special protection from double taxation, thanks to a very specific rule.
See that word right there? Only. That might be the most powerful word in this entire treaty. What it means is, if you're a US resident, Germany cannot touch this income. They're not allowed. The US gets the exclusive right to tax it. That's our hero clause in action, telling that old savings clause to take a hike.
But wait, it gets even better. The treaty doesn't just stop there. It actually adds a little something extra. We'll call it the as-if provision. It forces the US to treat your German renta as if it were good old American Social Security. And here's why that is such a huge deal. Look at this chart. A typical foreign pension, it's 100% taxable in the US. But because your German renta is treated like US Social Security, a big chunk of it, at least 15%, and maybe even all of it, is completely tax-free. That is a massive difference.
Okay, now for our other suspect, the civil service pension, or Beamtenpension. And folks, this is where the trap is. This one is not protected by one of those hero clauses for US citizens.
So what happens? Well, you get this nightmare scenario. Germany says, hey, we paid this for government service, so we get to tax it. And the US says, well, you're a US citizen, so we get to tax it. And boom, that's double taxation. Both countries are trying to tax the exact same dollar. Okay, don't panic. There is an escape hatch. You're not just doomed to pay double the tax. The solution is the foreign tax credit. You still have to report the income in the US, but you can then claim a dollar-for-dollar credit for the taxes you've already paid to Germany. Yeah, it's more paperwork, but it's absolutely crucial to saving you from that double tax hit. All right, I want to switch gears for a second because there's a new development that's a real game changer for 2025. We're talking about the repeal of the windfall elimination provision, or WEP.
So for a long time, this WEP thing has been a thorn in the side of anyone who worked in both the US and Germany. It basically cut their US Social Security checks. But that's ending. As of 2025, it's gone. And they're even making the fix retroactive all the way back to the start of 2024.
Now, getting more money is always good news, right? But here's the catch. You're probably going to get a lump sum payment to make up for the past. That's going to spike your income for just 1 year. And a higher income means, you guessed it, more of your Social Security could become taxable, and you might even get hit with higher Medicare premiums. It's just something you really need to be ready for.
Okay, so let's wrap this all up. Let's deliver the final verdict with a clear, actionable checklist so you know exactly what to do and don't leave any money on the table.
Honestly, it all boils down to these 3 simple steps. First, verify. Look at your statement. Who paid you? The DRV or some state payroll office. Second, assign. Put the money on the right line of your 1040. Rente goes on 6A, Beamtenpension goes on 5B. And third, claim your benefit, either the as-if rule or the foreign tax credit. Getting this right is everything. That one mistake, putting Rente on the pension line, is where almost everyone goes wrong.
And please, listen to this part. This is so important. Go back and check your tax returns from the last 3 years. If you or your accountant put your German Social Security, that Rente, on the wrong line, you probably paid way too much tax. And you know what? You can file an amended return and get that money back. The IRS could literally be sitting on a big refund that belongs to you.
So, now you know. You know the difference. You've gone from just being a taxpayer to being a financial investigator. And the only question left is, have you been reporting it correctly, or is the IRS holding on to your money?